Hey everybody, it's Jeremy here, and I want to talk about a market condition where it's really frustrating because the market gives you all the signals that it's going to trend to the upside, and just about the time you get into the trade, you start to see a little bit of profit, boom, it turns around, starts looking like it's going to trend to the downside. About the time you flip it all, you go to a bearish trade, boom, it flips against you again, and it's just back and forth, whipsaws you, takes all your stops and beats them all up, and it's just so frustrating. It's an actual market condition that is a pattern behavior. It's happening right now in the market. I'm going to teach you what the pattern is, teach you how to trade it, and exactly the indicators to use at the right time. It's going to be really powerful, so let's go. Hello everybody. It is Jeremy Whaley here from Trade Maestro. You can check us out over at trademaestro.com. If you haven't done so already, then please do get over there and subscribe to something so you can get on our mailing list and we can send you all the updates and stuff as we send them out. As I said in the opening, I want to talk to you about a market condition where the trade or the market looks like it's going to be trending to the upside and then it reverses against you. Now it looks like it's trending to the downside. As soon as you get in the trade, it reverses against you, and it's just back and forth, back and forth. And there's a lot of circumstances that can create this, but underneath it all, there's only one core pattern and then kind of a bunch of subsets that take place. And I want to talk about those patterns and then how we can trade them and how we can approach it, and then how we can apply that to what's going on right now. So let's get over to our charts, and if you take a look at this, you're going to see a picture of the Dow Jones Industrial Average, and you can actually see that back and forth behavior that I'm talking about right there. Okay, now if you look at the way I just drew it there with a big yellow line, it just looks like a downward trend. But if you can see the moving average in the middle, you can see that it's above it, it's below it, it's above it, it's below it. It's just back and forth, back and forth. Well, this brings us to the first point that I want to make. And that is the simplicity of a simple tool like your moving average. Now, I want to switch our chart over here and go to something like Netflix. And if we look at Netflix and you look at your moving averages, you're going to notice that this is just the simplest thing in the world to trade. I mean, whenever you cross up, you're trading to the upside, you buy it, and it's just up, 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 up. And if you did that back here in September of that year, you would have made $175 a share. Not bad, right? And then as soon as it reverses, you're back down. And if you'd shorted it here and shorted it all the way to the downside, you would have made over $400 a share. So it's really easy to trade a trend-based system like the moving average. And there's lots of different trending systems. Moving average is usually the one that I gravitate towards because it's very simple to use. It's easy to teach. And anybody can do it. So that's the one I usually use. But there's other trending systems that are out there. But the key idea with the trending system is once you get the signals, you know to buy the trade or you know to short the trade because it's going to be trending in that direction. Now, if all the market did was to trend, it would be so simple to make $1 billion. In fact, if that's all the market did, I would have already made at least $10 billion 10 times probably because it's just so simple. I mean, it's truly... When you're dealing with a good trending system, it's black or white. We're bullish or we're bearish, and you just place the trades accordingly, and you're off and running. The real world, though, which that is real, but in the real world, markets don't just go up and down. If they just went up and down, it would be easy. In the real world, what happens is markets are always in one of three trending directions, okay? 3 directions to the market. And those 3 directions are up, down, that says down even if you can't read it, and sideways. And I'm spelling this one out really slowly. Up, down, and sideways. Which one do you think is the hardest to trade? It's not a bear market. People think bear markets are hard to trade. No. By far, the hardest market to trade is the sideways market. Because what happens in a sideways market is we get a signal that we're bullish, and then we're bearish, and then we're bullish, and then we're bearish, and then we're bullish, and we're bearish. And every trend system I have ever worked with always struggles with sideways markets. The end. Some of you may know a technical analyst by the name of Wells Wilder. I don't know if you guys know that name or not, but Wells Wilder created a trending system based on what he called the parabolic SAR. And I'm going to show that to you really quickly here, if I can get rid of some of these other things. The parabolic, this is a really, really good example of this. If you're just using the parabolic, I don't know if you can see that. Hopefully you can. Let me change the color so it's a little brighter for this dark screen here. Make it yellow. All right, so when you see these yellow dots on the screen, basically that's where your stop goes. And as long as the trend is below it, as long as the trade's below it, you're moving bearish. And it's really simple to do that. And then you're bullish here, and then you're bearish, and you're bullish here for a little bit, and you're bearish, and you're bullish here for a little bit, and you're bearish. And if you just follow this system, you'd make a fortune, okay? The problem with the Wells-Wilder parabolic system, like so many trending systems, is this right here. And I'm using this example because it's just so stinking obvious. Bullish, bearish, bullish, bearish, bullish. And what ends up happening is you end up whipsawing to death. And that term whipsaw means you get into the trade, and then it whips you back in the opposite direction, and it whips you back in the opposite direction, and on and on. I have just flipped the chart over to look at the Dow Jones Industrial Average. And if you can see this here, you're going to see these little yellow dots just flipping back and forth. We're bearish. No, we're bullish. No, we're... I didn't draw that very well. Sorry. We're bearish. No, we're bullish. Bearish, bullish, bearish, bullish, bearish. Whoa. It's like, can someone make up your mind here? And the answer is no. No one can make up their mind. We are just back and forth, back and forth. Okay? That type of a market is unbelievably painful to trade. And that's the market that we've been trading lately. So what I want to share with you is a different way of looking at this and a different way of thinking about it, rather than getting frustrated, and it is frustrating, but rather than doing so, if we can recognize what's happening, realize that what's really going on is we're in the middle of what's called a consolidation period. And a consolidation period is basically a time period when the trade starts consolidating price action, and it's going sideways instead of down. This pattern that I've just drawn on the screen here, this is what we call a channel, okay? I'll write that in here. It's a channel. And essentially, the trade is moving back and forth between support and resistance. This is support. This is resistance, okay? Trade's moving back and forth between support and resistance. It's in a predictable repeating pattern. And if you recognize the pattern, it doesn't have to be scary, and it certainly doesn't have to be hard. The problem is, in a trade like this, in a pattern like this, that moving average that is so good to come along here and be right below the trade, in the middle of that sideways move, it's right in the middle, and you're below it, telling you to sell, you're above it, telling you to buy, you're below it, telling you to sell, you're above it, telling you to buy, and back and forth, back and forth, back and forth. If you were following the Wells-Wilder system, the parabolic system, it would be bearish. I'm kind of like mimicking parabolic dots here. Bullish, bearish, bullish, and on, right? So very, very frustrating to try to trade one of these movements here. Just because it's frustrating doesn't mean that you can't trade it. You just have to recognize it. And the way that you would trade it, if you wanted to trade this, is after recognizing the pattern, the way you would trade it is not the way we would normally trade. Normally what we want to do is we want to try to trade the trend and try to capture the majority of the trend. What we would do in a situation like this is try to buy on the bounce and then sell as we get up to resistance. Then buy on the bounce, and then sell as we get to our target up here. And buy and sell. That's how you trade the channel. And if you can identify the channel early, and if you can recognize that it's happening, this is the pattern. This is what you trade. You just trade where you know the predictable behavior is. And the truth is, you can make a ton of money this way. In fact, it's such a simple pattern. It's one of the first ones that I teach when I start introducing people to patterns. Problem is, once you start learning trends, the channel becomes the nuisance. Instead of being a gift, it becomes a nuisance. So right now, that's what's happening in the market. That's what's happening in the Dow Jones. But what you see, actually, let me come back to that because that's a more advanced variation. All right, so now you kind of understand this idea of the channel, and you kind of understand the idea of how we trade it. They're very common. We see this very, very often because in your cycles of the trend, what you're going to get is at the bottoms, you will get an accumulation period that very often looks like a channel. Not always, but very often. Okay? I just wrote chow instead of chan, but channel. That says channel. I mean, it's not spelled correctly. It doesn't look like it, but it says channel. That's what I meant for it to say. All right, and then as the bullish trend gets going here, and I'm going to run out of space here, but you'll get into topping formations that oftentimes look like a channel as well. These little consolidations, they're actually very oftentimes the reversal. So they're very, very important in terms of the function, but they're very frustrating to trade. So now I've kind of taught you about the channel. Now let me teach the same principle here. We've got our sideways moving stock in a predictable repeating pattern. But what if we have that same sideways moving stock in a predictable repeating pattern while making lower highs and lower lows? We have the exact same pattern. It's just now also making lower highs where each previous high is lower than the previous one. Each high is lower than the previous one. So lower high, lower high, lower high, and lower lows. By definition, a stock making lower lows and lower highs is in a downward trend, right? So if we're doing a downward trend, if we're making a downward trend while moving sideways between support and resistance in a predictable repeating pattern, we have what we call a downward channel. There it is. See that? Now, what if we had the opposite? What if we had a stock that was moving sideways between support and resistance? If we can get a pen to work here. Stock moving sideways between support and resistance in a predictable repeating pattern while making higher highs and higher lows. What do we have now? Well, now we've got a stock moving sideways between support and resistance in a predictable repeating pattern. That's the channel. It's a stock making higher highs and higher lows. That's a bullish trend. So this is what we call an upward channel. By definition, because of the higher highs and higher lows, it's also a bullish trend. But because it's in that pattern behavior, it's an upward channel. See that? What do you see happening right now in the Dow Jones Industrial Average? If I just draw the line through here, we've got the lower highs, lower high, lower high, lower high. We got the lower lows. I can't write them as fast as I can talk, so sorry about that. If I were to draw trend lines in there, and I'm sure if you've seen my market updates, you've already seen this, but draw your trend lines in there. Look at that. We're moving between a support and resistance in a predictable repeating pattern while making lower lows and lower highs. That is a downward channel. By every definition, it's a downward channel. Now, there's other stocks moving right now. Let's go take a look at Pepsi, for example. That's not it. PEP. There we go. All right, Pepsi is moving in a pretty decent little channel here. And you can see, if I draw some lines in here, it's slightly higher highs, so it's a slightly ascending channel or bullish channel, up channel. But for the most part, what do we have? We have Pepsi moving between support and resistance in a predictable repeating pattern. There's your channel right there, okay? So Pepsi is in a channel. Costco has got the makings of a channel building up right now. Ticker symbol COST. This is a little bit of a bigger channel, pretty wide. Okay, you can see that there. There's your channel. Now, what if you could recognize this in Costco and you could buy here right around 480? And if you don't have $480 a share, that's fine. What if you just bought it with a call option? Okay, so you get access to it. And what if this thing could go back to its previous highs, maybe the 560 or maybe the 600? Or let's just say we got back to 560 because that's kind of a conservative variation in here. You see that? Well, if you went in at 480 and you could just trade this to 560, that's $80 a share. And it might do that in about 2 or 3 weeks, maybe a month. Let me draw some lines in here so you can really see this. Okay, I'm going to put one right here. I'm going to put one at the top. I'm going to put one right here. See that range, that trading range? I'm going to put another support level right here. There you go. Now you can see clearly your channel. Stock moving sideways between support and resistance in a predictable repeating pattern. Let's go back to Pepsi. Let's do the same thing on Pepsi so you can see this one. Okay? So on Pepsi, I'm going to draw this with trend lines because it's actually more of a trend. It's making higher highs. And I'm going to make this a parallel line. There it is right there. There's your channel for Pepsi. There's another line right in the middle here. There's kind of the central pivot, if you will, that everything is pivoting around. So if you could recognize this and you knew that, okay, I'm in a channel and predictable repeating patterns tend to repeat, if I could recognize this and buy at support, each one of these would have been a different entry point, but the first one you would have gotten in here about $160. This one here you would have gotten in about maybe $161. This one here maybe about $164. And if you rode that up to a target up here, you get out about $176. So $160 to $176, that's about $16. This one we said we got in about $161, and we rode that one up to about $181. So that's $20. This one here we get in about $164, ride that up to about $184. There's another $20. So in this cycle where it feels like Pepsi didn't go anywhere, if you learned how to recognize how to get in and where to get out, you made $20, $40, plus another $16. So you made $56 a share while the stock is basically going nowhere if you know how to trade it. But you know what you didn't enjoy? If you were trying to trade this like a trend. So let me put the moving averages on here, and I'll show you how miserable you would be if you were trying to trade this as a trend. Because if you were trying to trade this as a trend and you didn't recognize that it's a channel, you would have been bullish a few different times. You would have been bearish right here, bullish again here, bearish here, bullish here, bearish here, bullish here. You're whipsawing. You're going back and forth, back and forth, back and forth. And you always know that you're in the middle of a channel when the moving average crosses kind of happen around the same vicinity. When it's kind of almost a straight line or just kind of a little wavy, you can draw your circles in there and be like, okay, that's kind of like the same area here. You're above it, you're below it, above it, below it, above it, below it. Something ain't right. You're not in a trend. Now, there's an upward movement here. It's bullish overall, but the back and forth, back and forth, back and forth is the channeling behavior. Okay? So let me show you the same idea here on Costco, since we're kind of looking at a couple different examples here. Here it is on Costco. And again, same idea. So we were bullish in all these moves here. Then suddenly you get bearish signals, buy signals, sell signals, buy, sell, about to get another buy signal here on Costco. And you could just draw a line through these little circles. You're like, okay, those are really close to each other. Really, really close. We're above it, we're below it, above it, below it, above it, below it. So how might we get the right buy-sell signals in here? And the answer is, like any other discipline in the world, if you're building a house, you have to use the right tool for the right job, right? So let's say you're building a house, and let's say you're framing the house up, and for that part, you need a hammer so that you can nail your studs together, okay? Now, we got all the walls built. We got all the framing done. Now it's time to put the sheetrock on the walls. Well, do you go through and hammer it just so you can attach all the sheetrock? And the answer is no. Usually, I guess you could do it with nails, but more often than not, whenever you attach sheetrock to the walls, it's much more efficient to do it with a drill because you're going to screw the sheetrock to the walls. So you go through with the drills. There you go. It's done, right? The right tool for the right time. Stock market is no different. If you're in a trend, which is two of the three directions, if it's bullish, it's a trend. If it's bearish, it's a trend. And in those circumstances, the best tool to use is your moving average. That's the best indicator you can use in a trending market or any other trending tool. It really doesn't matter. As long as it's a good trending tool, it's going to give you really great signals in a trend. But what about that freaking outlier, the sideways market, the channeling move? What are you going to use for that? And the answer is some type of a momentum oscillator. The one that I typically use for this is the stochastics oscillator. I'm going to show you my signals here in just a minute. But you can really use any oscillator. You can use an RSI. You could use a commodity channel index, CCI. You could use, did I say an RSI? You could use really any oscillator that's range bound between 0 and 100 is going to be really good usually. But I like the stochastics. And the stochastics, in my opinion, is one of the best tools available in the market, especially for sideways moves. Okay, so let me just show you how amazing this tool is. Right here at the top. Go straight down. And there's your sell signal. Wow. At the bottom, go straight down. There's your buy signal. We had a little cycle here. Back into our buy. Perfect. Sell. Buy. Buy again. Getting sell signals at the top. Those actually came a little bit early. Still timed out very well. I got to scoop my chart over. Sorry. And over here, we're getting buy signals at the bottom again. Now, if you can see the moving average moving through there, let me see if I can put all those on the chart at the same time here. Okay, so we're getting buy signals here. Sell signals up here. Buy, sell, buy. Okay, I'm just going to try to put these back up here so you can see them again. Okay. I may miss a couple, but that's all right. And then this one here actually worked really well too, even though that one doesn't always work well. But if you can see the moving averages in here, and I'm going to highlight these, you'll realize that the moving average signal told us to sell here, and then it told us to buy up here. It's told us to sell here, buy way over here, sell here, and we still haven't got the buy signal on the right side. Way late. Way late. So late that it keeps you on the wrong side of the trade most of the time. Let's come over to Pepsi. I'll show you how well this works. This works on every stock, folks. Doesn't matter. Okay? Ready for this? Sell. Buy signals. Overbought. Oversold crossing up. Okay? Overbought crossing down. There's your sell signals. Buy. Oversold crossing up. Crossing down. Crossing up. Look at that. Now, if we compared that with the moving average signals, late exit, late buy, late exit, late buy, late exit, late buy. Moving average, it's late every time in a channel. Every time. That's why I say in a channel, your worst enemy is your moving average. And your best friend in a channel is your stochastics. Now, every stochastic setting doesn't work the same. The stochastic is going to work the same, but the setting, I use a setting of 13, 7, and 5. Okay, so there's your settings that I use, 13, 7, and 5. That's what I use. It will work extraordinarily well in a sideways move like this. Let's come over to the Dow Jones Industrial Average now. If you've been following this right now, it's been very frustrating because you can look here and say, well, we had sell signals on your moving averages. Scoot this over here a little bit. Zoom in. We had some sell signals on our moving averages here, and it worked pretty well, but then we stop out, and then we're back in, and then we're buy signals, and then back into sell signals, stop out, back into buy signals, back into sell signals, back into buy signals. You're like, wait a second. As soon as we get into this trade, it's like the trade's reversing. Well, let's instead, let's just look here at what if we put a trend line down through here. Okay, there it is. And what if we duplicate that as a parallel trend line? And there it is. And now that we have the pattern, now that we can really see the pattern, what if we had a buy here and a sell here? Well, buy, sell, buy, sell. You see what's happening? The right tool for the job at the right time gives you the right signal. And if the pattern continues, it'll be time to short or time to sell very soon. So how do you trade that? How do you trade a channel? There's several ways you could trade a channel. One way is, well, the first thing you should do if you know you're in a channel, just to avoid confusion, just get rid of those moving averages. Just mute them, turn them off so you can't see them. Okay? That's the first thing, because the truth is, if you know you're in a channel, the moving averages are just going to confuse you. Next, and I'm going to snug this up here. Actually, I'll just put a parallel line in here. Remember how I showed you on one of them that there was kind of some ranges? Oops, didn't mean to do that. I'll get rid of one of these here. This is kind of your trading. It's kind of like zones. The whole thing is your channel, but right at the top there, sometimes it extends a little bit one side or the other. Okay, and that's what you see happening with the Dow lately. So you see it moving up like that. All right. So how do you trade this thing? Well, in an ideal world, what you would do is you would buy when it's bouncing, and you would short when it's selling. Since we've got a bearish channel here, there's a lot more bearish sentiment than there is bullish sentiment. You can make money trading the upside here, but I always tell people don't fight the trend. If the trend is bearish, don't be trying to trade bullish on the counter trend move. It's just going to be, it's kind of like a salmon swimming upstream. You know, eventually it gets back to where it's trying to go, but the bear eats it like on that last jump. It's home and bear eats it right on the way. See, so you don't want to be the salmon. You don't want to get eaten by a bear. So if you're in a downward channel like this, I generally would not try to take the bullish counter swing. I'm probably not going to do that. I'm going to try to trade with the directional trend. But there's some strategies we could do in here that will be very useful for you. And one of my favorite for a situation like this is to do what we call a bear call spread. In an ideal world, whenever you see this trend continuing here, just start writing bear call spreads here. If you understand your options, you know what that means. If you don't understand options, then let me teach it to you, but I can't do it today. But doing bear call spreads right here is going to be bank for you. Okay. And in a similar way, if you really believe that the channel is happening, you can do bull put spreads down here. When it's bouncing, you do bull put spreads. And you're going to make money on those. You're probably going to make about somewhere between 10 and 20% over usually 2 or 3 weeks. Depends on how much time you put into the spread. But that's really the best strategy that I can recommend or think about in a market condition like this. As it hits the bottom of the channel and it turns, do a selling strategy. It's an option selling strategy. It works great in a situation like this because it's not a trending market. In trending markets, I'd much rather just buy the calls, buy the puts, or trade the stock. But if it's a sideways move, option selling is really one of the most profitable ways you can do it. And, you know, if it stays stuck, doesn't really go anywhere, you're still going to make your money. So it works great for that type of a market condition. You can try to trade the inside of the channel. It's a little bit tricky, but you can do that. But the key here is to recognize what's going on. So let's recap. What have we talked about here? We've talked about markets don't always go straight up. They don't always go straight down. We go through 3 phases. There's an up phase, a down trend, and then there's a sideways trend. In the sideways moves, the channel is one type of pattern. It's not the only type of pattern that happens in sideways moves, but it's one type of a pattern that happens. When that happens in a sideways move, moving averages stink. Your stochastics becomes your best friend. If it's a trend, uptrend or downtrend, moving average is your best friend. If it's a sideways move, it's a channel, stochastics is your best friend. Use it. As the stokes are crossing up, enter some sort of a little bullish trade. Probably the best strategy for that is like an option selling strategy, like a bull put spread, or maybe naked puts or something along that lines. As it crosses back down, as it's overbought and it's coming back down, that is your stochastics. As the stochastics is overbought, coming back down, enter some sort of a bearish strategy. I recommend probably a bear call spread, or maybe covered calls, or some other type of a option selling strategy. Obviously, it depends on your skill level. It depends on your knowledge level. Depends on lots of things. But those are the types of strategies that I like to use in those market conditions. And, hopefully that helps you there as well. All right. I hope this is helpful for you. It's a little bit more of an advanced video. Very, very detailed, hopefully. You guys got a pretty good idea of how to approach it. If you want to learn more, a couple ways you can do that. Number one, you can subscribe to the YouTube channel here, because I do these videos and I do market updates and everything. And I also have started doing these 3-day challenges. So last week we did one on the bear market survivor. This upcoming week, we're going to do one on exchange traded funds. And I'm going to teach you some pretty cool stuff on that. And, do different tips and tricks videos, very similar to this one, as well as market updates and stuff. So the YouTube channel is a great place to learn. Also, check us out over at trademaestro.com. And if I can switch that over there. There we go. Check us out over at trademaestro.com. I've got a brand new Market Maestro Accelerator course coming up. It's coming up first part of November, so I don't know when you'll be seeing this video, but if you're seeing it first part of November, you can join us live. And that's going to be a great training where you'll learn all of this kind of stuff here on channels and patterns and stuff. We'll be going into really, really great detail on this kind of stuff. So I'll put the links below in the video, put it in the comments, and you guys can check that out whenever it's time for you to do so. But if you've got any questions, just type it into the comments below or send us an email, help@trademaestro.com. We'll be happy to help you there. All right. Thanks again for watching. I hope this has been helpful for you. Again, if you have any questions, type it in below. And until next time, I wish you the best. Happy trading to all of you. We'll talk to you soon.